We wanted to give you an update of where we're at. Start the week off strong. Congratulations if you had a great October. October generally is a very, very tough month, a very bearish month, right? But as I've said repeatedly, the market tends to not correct twice in the same year. You could have down days, you could have red days, 1%, 2%, but after a 30% drop, it's more likely than not that we're going to chop around for the next 60 days and the market will dump in January, which is typically a tax divestment tool that you use. Now, Powell did tell the market that they're going to move into bonds and out of MBS. That's actually very bearish for equities, but short of dropping right all the equities, market makers are going to take trims. They're going to take longs, finish off the quarter strong. I suspect November is going to end up being more bearish than bullish. And then in December, we'll get some sort of quick reaction on that December 1st timeline that Powell gave the market in advance. And you're seeing TLT kind of going down, which makes it cheaper to buy. So anything under about 75, we're going to be buyers of TLT personally, up to the hundreds for Q1, right? Equities, we still have our puts because again, Powell gave us the answer to the test. And I'm not heavy on anything. We're heavy cash, letting some fear come into the market. We have some suspicion. There's some nuclear plays. There's some oil plays. There's those VIX players that are saying fear is coming into the market. So we want to stay vigilant. And we also have to acknowledge that our AI has triggers that go back and forth. So for example, we had told you that there was a downside trigger for 670. That trigger actually went away. Now, does it mean that we're not going to come down to 670 to gap fill? Of course we can, right? AI, we use it as a guide, but like any software, we're very, very careful because all our triggers are upside. Does that mean it'll switch? Who knows? In our Discord, we stay very nimble because we have no idea if it's going to drop and then squeeze. So we take our positions, we hold, we trade in and out of our position as the AI says, hey, go long, go short, because the AI is reading something. Why did it switch? We're going to find out together. Does it drop? Well, we'll find out together as well. But let's take a look at some of these charts.
Now, what we found was on Friday around this area here, which was about 169-ish, our AI trigger on our lower time frames. Remember, we use 3 different time frames. The 15-minute says we're going up to about 688. We know that we have this dark pool a little north of 690, and the 1 hour says we're going to 694. When does it do it? Only the AI knows. So what happens when this trigger kicked in? I don't take the long on this green candle. On this green can actually on this one, you take a long, and then I'm just cautioned because yes, this came all the way down, and then retest. I take our long, and then I trade around it. 685 is our first stop loss above the 10 SMA, and I let the stop loss run. So if I trigger, let's say I take 10 contracts long, and right here my stop loss kicks in. Again, when I get to the same level as before, anything under and then a recovery, I'm going long. Yeah, I do not have any dark pulls in this area, but I follow the AI trigger, and then I keep a size down because I do have a dark pull just under at 677, and ideally we want that 670, which are gap fills. But here we keep taking our longs and we ping pong. As long as the upside triggers are 688 and above, anytime we come down here to this area below 680, we're taking the retest and we're taking longs with a smart stop loss. Now, it's not full size because we do have 677 down here, as well as other gap fills, right? On the daily, we're horribly downside, but we take the longs. Anything under 680, as long as it holds, we're above the 10 SMA, 685, 686, 688 to 690 to the 694 area, which is our first long on the 1 hour, which is where market makers tend to behave. The 15-minute is telling me that the trading boxes, the trading stations at a TD or any of these, they're day trading profit to go north. Why? Because now we know that December will be when Powell stops buying MBSs. So the market is just going to crawl north, right? Take positions, crawl north, and then they'll spit out their profits as soon as they get some sort of bear signal to let the market go, trim a little bit in December, and then roll over in January. But anything above the 680, we go long. 677, 676, unless our AR trigger reverses and goes downside again, we just keep buying these dips, right? Don't assume that the downside gaps are going to fill anytime soon. There's some 16 gaps to fill. The only gap I'm waiting for to fill is futures, and that could fill overnight, trap bearish, and go north. But again, our AI trigger says 688 all the way to 694. We stick with it until